Myself as Dinesh Kumar, registration number MA20480. My topic is a study on working capital management on Shriram Transport Finance Co. Limited. My internal guide is Mr. C. Dhanapal, Assistant Professor, Department of Management Studies, Vailtech Rangasanku Arts College, affiliated to the University of Madras, April 2014. Introduction. Working capital could be defined as the portion of assets used in current operations. The movement of the funds from capital to income and profits and back to working capital are one of the most important characteristics of the business. If the operations of the company are to run smoothly, a proper leadership between fixed capital and current capital has to maintain. The businessman should be able to judge the accurate recruitment of working capital and should be quick enough to raise the required funds to finance and for the capital needs. Working capital is also called as net current assets. Principles of working capital management policy. Principles of risk variation, current assets policy, principles of cost of capital, principle of equity position, principles of maturity of payment. Company details. Shriram Transport Finance Limited is a part of Shriram Group. Shriram Transport Finance Company, STFC, is India's largest player in commercial vehicle finance that was established in the year 1979. Mr. Arun Duggal is the non-executive chairman of our board. STFC giving finance for 5 types of segment vehicles. Number 1, SGV, small good vehicles for only 2-wheelers. LGV, light good vehicles for only 4-wheelers. HGV, heavy good vehicles, that is for 10-wheelers. Passengers, bus, van and public transport vehicles. And finally machinery for tractor and job. Area of operation, all India. Branch offices, that is 528. And total employees, 14,159. Customers, 8,50,000 and counting. And finally agency force, 15,000 plus resident representatives, that is 1,300. Next one is review of literature. Working capital management entails short-term decisions generally relating to the next 1-year period, which are reversible. The management of working capital involves managing inventories. The goal of working capital management is to ensure that the firm is able to continue its operations. An efficient cash flow to satisfy both maturing short-term debt and upcoming operational expenses. It has been divided into two, that is Griff Philberg Thomas K. Kruger has given the definition as firms are able to reduce financial cost and increase the funds available for expanding by minimizing the amount of funds tied up in current assets. Carol Hoforth Paul Rested 2003 has established that working capital management routines of a large random sample of small companies in the UK are examined. Objectives of the study. Primary objective to study the sources and uses of working capital on Shriram Transport Finance Company Limited. Secondary objective to study the liquidity position through various working capital related ratios. To study the working capital components such as receivables, accounts, cash management, inventory management. To brand an organization by the ways in which they manage the working capital by using comparative analysis. Scope of the study. The management of working capital helps us to maintain the working capital at a satisfactory level by managing the current assets and current liabilities. It also helps to maintain proper balance between profitability and liquidity of the business significantly. By managing the working capital, current liabilities are paid in the time. The current assets should be large enough to cover its current liabilities in order to ensure a reasonable margin of safety. Need of the study. Need of the study. Investment in current assets represent a substantial portion of the total investment. Investment is current asset and the level of current liabilities have to be geared quickly to change in sales, which helps to expand volume of business. Gives the company the ability to meet its current liabilities. Take advantage of financial opportunities as they arise. Limitations of the study. The data for the study were mostly collected from the websites and from few books. The data received was only for 5 years and hence a complete data analysis cannot be worked out. The data used in the study have been taken from company's annual report only. Research methodology. Research is an organized systematic database critically objective scientific inquiry of investigation into a specific problem undertaken with the purpose of finding answer or solutions to it. The research design is the arrangement of conditions for collection and analysis of data. Primary data, it is the information collected directly without any reference. Some of the information had been verified and supplemented by the conducting personal observations. Secondary data. Secondary data was collecting from all ready published sources such as pamphlets, annual reports, written and internal records. Data includes journals, magazines relating to financial management. Period of study. The period of consecutive study between 2008 to 2009 and to 2011 to 2012 has been considered for the purpose of study. Tools and techniques used for analysis. Comparative financial statement, schedule in working capital, ratios analysis, common size balance sheet. Findings. As a whole company is maintaining a sound working capital, the current ratio is decreased from 2009 to 2012, 4 years, and it's pretty increase in last year 2013. The comparative balance sheet makes the comparison between the assets and liabilities for the year 2009 to 2010, which is 7.8%, and 2010 to 2011, 17.16%, 2011 to 2012, 13.19%, 2012 to 2013, 25.29%. There is an increase forms part of the year. The common size balance sheet makes the common opinion between the sale, asset and liabilities for the year 2009 to 2010 and 2010 to 2011 and 12, and also from 2012 to 2013. The common size balance sheet analysis is used to check whether assets and liabilities are of same percentage for 4 years. The percentage for common size balance sheet is 100 for 4 years. Statement of changes in working capital is prepared for 4 years for analyzing the increasing and decreasing in current assets and current liabilities. Net working capital ratio from 2009 to 2013, that is 0.16%, 0.02, 0.22, 0.25, 0.30 and 0.24 respectively. But the company has high working capital, that net asset of the company. We can suggest the company to maintain more working capital rather than net asset. Fixed asset turnover ratio from 2009 to 2013 are 27.5%, 94.8% and 136.9% and 109.1%. By observing the above table, it is clear that fixed asset turnover ratio is 27.50 in 2009. It is increased in next year comparing to 136.09 and 148%, and is decreased to the final year to compare with last year, that is 109.21% in the 2013 respectively. Higher sales indicate over trading, lower sales indicate under trading. So company is running in smooth manner. Suggestion. Shriram Transport Finance Company can maintain adequate level of working capital to avoid risks of excess inadequate working capital. It can take necessary steps to maintain consistency in current assets. Though the company is not able to generate enough profit since 2009, it has to focus in realizing its debtors and also invest its profitable projects. Regarding the balance sheet for the past 4 years, the company is able to maintain the assets and liabilities in a stable position. As the company is aggressively increasing the fixed assets and current asset value, maybe because the company has few good offered in hand and it's also accumulating its resources. The company should be more focused in optimum utilization of the acquired resources and limit its operation resources so that the company shareholders will be happy. A statement of changes in working capital indicates the current assets and current liabilities position for 4 years. As of now, the company has maintained good financial position by controlling the current liabilities and other expenses. It has suggested that the company should maintain the same performance in the future. Conclusion. The company is maintaining the sound working capital. Necessary steps should be taken to curb the creditors of the organization. Effective care should be taken on debtors to realize the funds which are due to the company. Evaluating ratio on various aspects of capital, which reveals that the organization is running successfully. In present, Shriram Transport Finance analyzes the working capital management. Company's overall profitability has been increased in 2013 to compare with the previous year. The company has a few good projects offered in the hand and should accomplish profitability in operating expenses and optimum utilization of available resources. So the company's performance outlook continues to be positive and optimistic. The company remains confident of strong operating and financial performance. Thank you.